Monaco 64, home of alternative economics and contrarian views. So I always find that it's good to look at the bigger picture in terms of technical analysis for things like currencies, the stock market, commodities, gold and silver as well. And today we're going to look at why gold and silver have actually been waiting for the general commodities to catch up with them. General commodities, I mean the CRB Index, in which gold and silver are actually included. But the major part of the CRB are the other general commodities, crude oil included. And yes, the analogy would be a group of friends go out hiking in the forest, and there's one individual who's leading them. Let's say it's gold, then there's silver behind, and all the other commodities, they're going for a hike in the woods. And for some reason, the people or the metals behind gold and silver get lost. And gold and silver continue going a little longer, but then they realize that all the other commodities are not behind them. So they wait for them until they catch up with them. and it might sound weird, that analogy, but I think it makes sense, especially when you look at this chart here. So there are two charts, of course. The top chart is the CRB index, and the bottom chart is gold. And you will notice that we had a major bull market from the end of the 20th century, around 1999, 2000, up until 2008, where the CRB index went from just above 100, around 120, all the way up to almost 480. So that was a major bull market. That was when crude oil also topped almost near $150. And by crude oil, I mean the WTI crude, not Brent crude. And you can see that gold had a bull market as well. It had like a double bottom in 99 and 2001, and it went from 250 all the way to 1,030 or thereabouts. That was in March of 2008. So you can see there that in 2008, the CRB topped and gold topped. But the correction in the CRB, as you can see here, has been ongoing. Yes, we did have a rally in 2011 in the CRB index, but it failed to get back towards the old highs, and it failed to make a new high. And despite that, gold made a new high. It went from around 680 after the correction in 08, 09. It went from 680 to 1920. And what happened there? Well, I think gold realized that we're going to have hyperinflation or massive inflation, and it made a quick move. And this corresponded with all the QE that the Federal Reserve did. But for some reason, the general commodities got lost, and they've been correcting ever since. And they made a huge bottom, of course, in 2020. Just like gold and silver made a bottom in 2020. But you can see the bottom in gold in 2020 didn't even get it back towards that 680 level from 2008. We went to 1450. So yes, gold is way ahead of the general commodities. It has been, of course, frustrating for those who have just started stacking gold and silver. And by just, I mean the last year or 2 years. Some people probably chased it when we went up to 2000 back in 2020, or just above 2000. They chased silver, and it has been frustrating. But you can see here by these charts, they're monthly charts, that the CRB index is really broken out of this falling wedge. And am I saying we're going to go straight up now? No, there's going to be corrections along the way, a lot of volatility, but the trend now seems to be higher. And I would expect eventually commodities to break through 480, that old high from 2008. And as you can see here, all gold has been doing, and even throughout the period from around, let's say, 2013 to 2019, when gold was making a base there between, let's say, 1100 and 1375, gold was still waiting for commodities, because you can see that commodities were still coming down, and they still made a major low back in March 2020, and now they've rebounded very sharply. And you can see that there's like a pennant forming in gold in the monthly chart, and we're trying to break out of this pennant, and it looks encouraging. Am I saying we're going to break out soon when we're going to go to 2,500? No, but I think there are people out there who are saying that we could see a flash crash in gold. Do I see that? Anything is possible. In the paper market, anything is possible. The bankers can drive the price down $100 over a weekend from Sunday, let's say, to Monday on the COMEX. And you could wake up and gold could have gone to 1650 and be back at 1750, for example. I'm just going to show you the silver chart here as well, because silver has been waiting as well for the general commodities, but it hasn't done as well as gold because it's a hybrid. It's a monetary metal and also an industrial metal. And what about those people who say we can't have a bull market in commodities if the central banks are going to rein in the liquidity, and if we're going to have a recession? Well, as I've said, I don't think they can rein in the liquidity enough. And the kind of commodity bull market will not be based on a strong economy. It will be based on the debasement of the currency, and that's what it tells me, the bull market in commodities. But as you can see here, in 2008, silver topped at 21.35. That was in March of 2008. So it didn't make a new high like gold did at 1,030. The previous high in gold had been around 1880 in 1980. In silver, it had been around 50. But silver eventually corrected, of course, after that top, just above 21. And it corrected below 10, but it went almost straight up in a year to 50 to test that high from 1980. And that was when the CRB as well was failing to make a new high. Silver matched an old high. And yes, it has been waiting ever since. And it did bottom in March 2020. It didn't go through the 10 level to match the 2008 low. It held there, and it went almost straight up to 30, and we've been waiting for a year and a half now in this consolidation. And you can see how the high from 2008 has been very good support for silver. And yes, we're also forming a pennant in silver. It's been frustrating, but as I said, I think the general commodities are catching up. And there's another thing that I don't follow very much, but a lot of people do, and it's the commitment of traders on COMEX, the COMEX gold futures. And David Brady, who I follow on Twitter, he's at Global Pro Trader. He's based in Canada. He's noticed that the commercials, who are basically the bullion banks, they decreased their short position, net short position on COMEX by 20%. And that's the last report. It came out yesterday, but it's for the period up until I think Monday or Tuesday last week. So it will be very interesting to see next Friday if they covered even more in the last week, because these are old numbers. But what happens here is it looks like the commercials and the bullion banks especially, they're covering their shorts. And if the open interest, the net short, was still going up and making new highs here, and that's the blue bars, that would be concerning. That would mean that they expect the market to drop further. And so what does he say here, David? He says, COT, commitment of traders, commercials cut their net short position by almost 20%, or 48,000 contracts in 1 week. The most since April 2019 and the sixth fastest since 2015. Typically a sign of a big bounce. Now have their smallest short position since September, when gold bottomed at 1721. And I can tell you that David Brady is not always bullish gold. He's more of a technician. He's a trader. And I don't trade gold. I hold gold and silver as insurance. I like to follow the markets, of course. We're very near a juncture, I think, and those long-term charts, those pennants in gold and silver, they can go the other way as well. Gold and silver pennants and flags are not perfect. There is a chance that it could go down, but the rule of thumb is that 3 out of 4 times it goes, when there's a consolidation, the market resumes the previous trend. And as you can see, the previous trend has been higher. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.